Multiple offer madness. Wait a minute. Are we in 2022 against real estate market? Hey guys, Austin Irwin here, your millennial mortgage advisor with Directors Mortgage, wanting to discuss the real estate market. Yes, multiple offer situations are back in the Portland Metro. And today we're going to be talking about what's causing those multiple offer situations and also some tips to be able to get a more likelihood of your offer accepted in this changing market. So first off, what's causing the rise in buyer demand and keeping inventory low? Well, we're seeing mortgage rates improve month over month, and they currently are sitting at 6.3% compared to a week ago, about 6.4%. And remember, we've been discussing that lower inflation causes lower mortgage rates, which we've been seeing inflation come down month over month. Also, with these lower mortgage rates, it's providing more buyer demand. We saw loan applications shoot up 8% compared to last week. So this is exciting news. But the media has to find a negative in every good story. So that being said, the media is saying mortgage applications to purchase a home rose 8% last week compared with the previous week. They were, however, 31% lower than the same week 1 year ago. Now, again, 1 year ago, we were in a completely different market. We had lower inventory. We had extremely lower rates in the high threes, low fours. So clients had a lot more buying power. But since then, again, just showing a testament to this real estate market, even with higher mortgage rates, we're seeing inventory stay low and buyer demand stay consistent. Now, let's look at existing home sales for the month of February. And closing on existing homes nationwide was 14.5% versus what was expected, 5%. So we saw home sales jump up by 14.5%, beating expectations. So we're not seeing the housing market retract. We're actually seeing it heat up tremendously. Also, we saw that home purchases, they are down 22% from 37% year over year. But let's remember, guys, we do have higher interest rates, a little bit less buyer demand compared to what we saw in 2022. And then inventory, it unchanged. We didn't add any new homes. It stayed at 980,000 units, and that's up 15% year over year. But again, the media is comparing the same time compared to last year. Still very low compared to 4 million in 2007. Let's not forget, the media keeps saying that there's going to be a housing bubble, a housing correction. But with our low inventory, and we look at the last housing correction back in 2007, well, 2007 happened because we had too much inventory and unfair mortgage practices. That's not the case anymore. So we have to discard that. Now, what do we have in inventory currently? Well, the media is saying there's 2.6 months supply. In a normal market during this time is 4.6 months. So again, we're still below the norm in inventory. But remember, the media said that our inventory is up 15% year over year. But let's look at why it's up 15%. Right now, there's 980,000 homes for sale nationwide. And you compare that to 2022, well, look at that big difference. Obviously, there's going to be a discrepancy there because it was a completely hot market in 2022 spring. So we have to take that at a discount. Now, let's dive into the numbers even deeper, though, for existing home sales, February 2023. And we actually, when we strip out the homes under contract out of that 980,000 home number, there's only actually 578,000 active listings nationwide. And that brings us to 1.5 months supply when considering active listings. So it's no wonder why we have a very competitive market currently, and we're seeing multiple offers heat up this market as we get into spring and summer. So what are some tips that we can use to make our offer stand out and have a better chance of getting our offer accepted? Well, the first tip is more earnest money. Basically, if you don't know what earnest money is, it's a deposit to the seller. Just think if you're a renter, you have a deposit to your landlord. It's like a security deposit showing good faith that you're serious about buying that home. Now, typically a buyer's going to put 1% in earnest money, but as the market heats up, more offers are coming in for the seller to review. Anything that we can do to make our offer stand out is important. So maybe now consider 2 to 5% in earnest money. Now, remember, when you go to the closing table, that earnest money is going to get rolled over to your down payment. So you're going to be using that money when it's all said and done. Provide a photocopy of earnest money with the offer. Again, it shows the seller, one, that you're serious and that you have the money in the bank to be able to ensure them that you're going to buy that home. And then release earnest money upon acceptance of the home inspection. So when your agent is writing that contract stating that you're going to release the earnest money upon acceptance of the home inspection, it's going to show the seller that you're serious that you want the home, and that once you get past that inspection contingency, you're ready to go to close on that home. Also, at Director's Mortgage, we guarantee up to $5,000 in earnest money if we cannot provide financing. So this is a great tool to use, and that's something that we're going to talk to the seller about on your behalf as well, making you stand out compared to any other pre-approval out there. Multiple offer madness tip number 2, it's all about timing. What's important to the seller? Do they want a quick close? Great, we can write a 12 to 15-day close. Do they want a long close? Does the seller need to find a home? Okay, great, let's accommodate that. Occupancy, give the seller time to pack and move, or offer them free rent back. Again, anything that you can make it easier on the seller is going to make your offer stand out. Multiple offer madness tip number 3, get the buyer fully underwritten in advance, basically called credit approval. It's so important that a client is fully pre-approved when they're making that offer, and that they're with a local reputable company. Because again, working with a pre-qual, basically where your lender just does a loan application but doesn't collect any supporting documentation, is not going to hold the same weight as a pre-approval, where they do a full loan application, collect supporting documentation, and get what's called a credit approval. So these are things that are really important. Make sure the buyer and the lender are working cohesively together. Now, multiple offer madness tip number 4, volunteer financial information. Provide your credit score, copy of your bank statement, lender provide client reviews with pre-approval. All these things can make a difference. Now, obviously redact those important items on the credit score or on your bank statement, but showing the seller that, hey, you have good credit, marginal debt, or that you have those assets to be able to come in with closing on your bank statement is going to go a long way. And tip number 5, ensure the lender sells the buyer. Again, making sure that that lender knows who the client is, knows who you are. So when the listing agent calls and says, hey, so-and-so made an offer, they're not scrambling trying to figure out who that is. It's going to go a long way showing that the lender has already done and vetted a full check on that client. Many good listing agents are going to call your lender. So again, make sure you let your lender know that you're going to be making that offer. Lender needs to return phone calls promptly. This is going to be extremely important, especially with those bigger online lenders. They're probably not. Sell the buyer, have a lender call them, selling the agent, again, super important, and use that certified pre-approval letter with the earnest money guarantee up to $5,000 at your advantage. Now, last thing, again, the media keeps saying that there's going to be a correction, that there's going to be a crash, and that home prices are going to drop. But let's remember that we have extremely low inventory, falling mortgage rates, which are going to cause more demand. So it's pretty unrealistic that there's going to be any housing correction anytime soon. And the longer that we wait and we sit on the fence hoping for that correction, well, prices are going to continue to climb. If we look back at 2012, housing prices are up 116%. Since the aftermath of COVID in spring, summer of 2020, home prices are up 40% nationwide. And currently, if you look at year-to-date prices, they've only dropped about 2.95%. So if you bought in the middle of 2020, well, you're up 38% currently. If you bought and you kept your home since 2012, you're up 113%. So again, things are looking really good for the real estate market. Don't wait, because again, once you get into that home and rates do drop to that 5 or 4.5% that we're forecasting, you're going to be able to refinance, use the equity in your home that you've gained, and lower that monthly payment and stay out of that multiple offer madness. Any questions? My name is Irwin, Senior Loan Advisor at Director's Mortgage. Thanks so much. Bye-bye.